You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That rockin' music, that volatility-themed music means it's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. So many programs, a plethora, a legion of programs for you guys to check out. Best place to do that, of course, the mothership, the flagship, theoptionsinsider.com, where, of course, you can find all of our articles, as well as our radio. People forget we have a lot of written stuff on the web as well. We're not just a radio machine, even though we do churn out a lot of radio as well. A lot of great written stuff for you guys to peruse at your leisure, maybe while you're streaming the show. OptionsInsider.com, news, articles, analysis, education, unusual activity, all of the above. You can check it out there if you are so inclined. And of course, if you want to just mainline that audio, you can also grab it iTunes, TuneIn, Stitcher. Just search for, easiest place to get all of it, of course, is search for Options Insider Radio Network. Get our main radio network feed, and you can mainline all of that. I promise you, it's a lot. It's the fire hose. It's the full explosion of content. But if you can handle it, that's the best place to get everything. Second it's out, that's our daily news show. That's all the programs we do. It's quite a bit. If you want selectivity, want vol views, of course, you can just subscribe to that as well. And of course, however you're listening, we want to make sure you grab our mobile app via iTunes, Android, and the beloved Fire OS, because it makes it easy to download and stream everything you want. And of course, you can always ask us questions there as well. We'd love to hear from you guys. And of course, lest I forget, you can also join us live, noon Central, 1 p.m. Eastern, every Friday to stream the old Volatility Views program via Mixlr. That's MIXLR. And you too can be a part of the fun. See how the sausage is made, a little glimpse behind the scenes into the world of all things Vol Views. And joining me on the old Volatility Views program today, let's go out. Let's go out a bit. Let's go out a ways. All the way, he's not in the scenic corner office this week. He's above and beyond and far out to the west. He's actually beaming in from either scenic San Fran or San Jose, I'm not sure. I think he's actually coming to us from the Live Vol offices, which would mean he's in San Fran. He is the senior instructor over there at the Options Institute, Mr. Russell Rhodes. Russell, welcome to the program. And are you indeed in San Fran today, sir?
I am in San Francisco. It's, I woke up in San Jose, took the train down here for a meeting, then to come into CBOE West, which is the live ball offices, and talk to you guys, and then spend some time with the live ball guys talking about the platform and some enhancements that they're working on, because they're always working on enhancements.
Give us a tease, a
And
sneak
then
peek really quick. What are they working on really quick? Top of the show. What's cooking over there? I know they have the data shop, a lot of other cool stuff. Give us a sneak peek, a tease, if you will, sir.
Oh gosh, I think an enhancement to the backtesting tool might be in the future.
There you go.
How's that?
That's a tease.
Yeah.
That's a sneak
I'm
peek.
trying to skip around and think now. What is it? What's okay if I say? I think that one's all right. So that might be something that we're chatting about. Just some other things with the charting that we're gonna kick around, maybe make it a little more flexible. Things like that.
We like the charting. We like to play around. I have it open right now as we speak. I have it open every show we do, including, of course, over here on good old Volatility Views. So if you want to play along, listeners, livevol.com to learn more. Just go to livevolpro.com. You can sign up there as well. That's what we like to use here throughout the program, or indeed the data shop. Get your own custom, let's say you want only one specific underlying for a couple of months, a couple of series. You can get just that. Pretty cool custom data sets when you need them. And joining us from a little bit closer to home, I believe he's downtown, maybe not. We shall find out. He is the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com, as well as Carmen Line Capital. Mr. Greasy Meatball, welcome back to the program, sir.
It is great to be here. It's good to be alive. The world is great.
Where are you beaming in from? The World HQ downtown or the satellite office in Riverside?
I'm in the satellite offices, and our satellite offices in Riverside.
Good to know, sir. Not quite as scenic as San Fran, but it'll have to do for the show. Meanwhile, it's time to get rolling. It's time to dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review. Like the man said, this is the portion of the show where we break down what was moving, what was shaking this week from a volatility trading and analysis and trends perspective. Like I said, we're recording and streaming live Friday, 12 p.m. Central, 1 p.m. Eastern, right in the middle of the session here to give you some frame of reference for what we're looking at right now. And as we're wrapping up the week here, most of the markets taking it easy today. Most of the major indices off slightly on the day. S&P off about 0.25 percentage point or so. Dow off a little bit more. NASDAQ off a little bit less. And good old VIX cash also exhaling a little bit, off slightly on the day as well. But of course, it has been a week marked by new highs throughout the week. And of course, we are on this week post non-farms and post surprise again to the upside, with the market continuing to feel strength all of this week, today notwithstanding. And of course, with all that upside, we see VIX cash flirting with new lows. In fact, it hit a new 52-week low earlier this week, just about to break into the 10 handle, but couldn't quite make it. 11.02 earlier this week. And as we are streaming live and recording right now, it's hovering right around 11.5. So we'll see if we can flirt with those lower levels throughout the show. But a lot of interesting stuff going on this week. Of course, we still have some earnings going up this week as well. Not as many, but a few. So we'll get to those in a little bit too. But a lot of interesting stuff kicking off. Let's start in reverse order. Mr. Greasy Meatball. A lot of stuff kicking off. A lot of people going on and on about VIX cash hitting that 52-week low. A lot of other things popping off this week. So what in particular caught your eye from a volatility perspective this week, sir?
You know, what we've seen is yes, we did hit a 52-week low. Market hit 52-week high. That should kind of happen. That's a sign that, things are acting the way they're supposed to act.
Things are working.
Yeah, but since then, there was a story about all the short interest in VIX futures that went around. And I think everybody who's short VIX futures saw the amount of short interest in VIX futures and has spent the week slowly trying to unwind some of that, because we've seen really the S&P do nothing and VIX continue to be, kind of creep toward 12 again. And we've seen the VIX futures pretty stiff. They touched 1230 a couple of days ago, but have not gotten anywhere close to that since. And they have been offered. They've been bid for some time. So that was kind of what caught my eye in terms of trading this week. VVIX, and if you don't believe me, take a look at VVIX, which went from 84 to 96. 96% this week with almost nothing happening in vol. That's an eyebrow raiser, to say the least. When you get a strong move in VVIX and VIX itself and the VIX futures are flattish or even down, that's a sign that there's some hedging activity going on and there are some people covering themselves in case their big, huge short futures play isn't going to work out.
Let's stay on that futures tip for a minute because you're right. It is some people. I think we even have a listener question about just that. In fact, I'll let Russell do his rundown first, and then I think we'll dive into that. Maybe we'll cheat and give a listener a little time on the show a little bit earlier. Before we do that, Mr. Rhodes, what's been catching your eye aside from your travel over there to the Live Vol HQ this week from a volatility trading perspective?
Can I do the Ollie Williams weather?
Sure.
you know that is? That's the weatherman from Family Guy.
Oh, I haven't seen Family Guy in a long time.
And if he were doing the VIX report, he would just go, VIX is low! And that would be it. VIX is fairly, the Mark mentioned VVIX and it being, an eyebrow raiser. I think some of the boost in VVIX is coming through put purchasing, just because of what we've been seeing in put volume. So, I don't know if VVIX working its way up to the mid 90s when VIX is low is like an indication that VIX is too low and everybody's buying calls thinking it's going to go up. When I was at both the risk managements in the fall last year, there was a lot of commentary about it's a lot easier to sell volatility when it's at 13 and realized as at 6. And that's kind of what people are doing when they're buying, VIX put options with in the very low teens for the strike prices. So I raised my eyebrow and then I questioned VVIX.
Yes. Well, Russell, the other piece is there were a lot of guys that thought they were really smart and did these big VIX 15-13 put 1x2s or they did the 14-13 or the 13.5, 12.5 put 1x2, where they bought one and sold two and went, well, VIX has a floor. I mean, I'm not going to lose money on this trade. There's no way that the 13 puts are going to get really – there's no way this thing could expand so that I actually lose money on it. VIX would have to go to 11.5, and that's not going to happen. Wah, wah. I'll tell you what I am seeing a lot. I've seen the 17-21 1x2 call spread, short paper selling 1, buying 2 in bulk, and it has slowly expanded from 10 cents to about to 26 cents over the last week. So there is some, that is the back spread du jour right now, and there are people all over it.
It is amazing how that strategy in particular has just garnered so much mind share and attention out there. It's pretty much every given week when we parse the activity out there in VIX. And granted, there's a lot of it. VIX has a lot more paper than just about any other product you can think of, with the exception of a handful. You're always going to find at least we stop talking about that many unless they go up for size, because you can always find the short 1x2 in just about any month and just about any size you want out there. So it's kind of interesting how that persists. And it's effective a fair amount of the time, not all the time, as we've talked about in the show in the past, but it is a decent approach to VIX. We were talking about the VIX futures. I want to get back to that for a second. We talk about it a lot here on the show. We don't get all the time into the term structure, but things were looking remarkably steep, kind of alluding to what you were talking about earlier, Mark, there with some of the short interest. In fact, as we were coming into the show, like I said, with the VIX cash right around 11.5, that front month future was right about 12.5, and the Sep future pushing about 15 and getting just richer from there. So much so that we have, let's move him up from the Vol voicemail. Let's get him in now while we're talking the futures. This question comes from JJK. He writes, caught his eye as well. He says, the Sep future trading over a $3 premium to the cash seems pretty steep. Market pricing in a big sell-off in the near future, ? So Mark, This seems to be alluding to what you're talking about earlier, a lot of the short interest out there in VIX futures. What's your take here to our friend Mr. JJK? And also that's about, at the time he wrote in, it was about a 350 premium from to the Sep. Does that strike you as overly steep?
It's steep. It's not, I've seen steeper, but that is very steep. And what we found is typically the futures are right and the cash is wrong, or they meet in the middle. But typically, when it gets this steep, there'll be a little bit of mean reversion in the cash before they start moving together. The Sep future got to 1460 early at the beginning of the week and is now back toward 15. So there is definitely something going on there. I would say that market maybe. So the problem here is, Mark, I've been saying for weeks that we're going to settle below 11 on Wednesday, and the Sep future is not acting that way. But I think what we could see. Yeah, I think we could see that happen, but there appears to be some residual underlying fear growing from something currently unnamed, and it's allegedly going to take place in September.
Yeah, if you're buying futures out into early next year, you're paying a 19 out there. So yeah, things are fairly rich. What about you, Mr. Rhodes? Before we move on with the rest of the show, I'll make sure our JJK gets his love. What do you have to say for him here and his contention that the premium he in particular calls out the Sep future, but you can almost kind of pick your poison here. He says that premium a wee bit too rich maybe for his taste compared to the cash.
Oh yeah, absolutely. And in fact, if you take, I haven't looked at it in a couple of days, but I did the CBOE VIX video on Tuesday, and I overlaid the VIX curve from August 10th of was that August 10th? Yeah, no, August 9th of this year versus August 10th of last year, because August 9th was a Sunday, and last year. Spot VIX was a point higher. The August contract was a little bit higher. September was basically in line, and then the rest of our curve this year was at a significant premium to last year's curve at the same time. And so he's right in saying that we're in really steep contango. The other kind of piece to that is I've been doing some work with the COT report for the class that we're doing next week, and I'm going to put a picture up in just a minute on the Twitter where I'm showing the speculative long divided by the speculative short positions. We've been very, very low. So the speculators are very short those futures, even though they're up at a premium, which means even though they're up at a premium, if we get a VIX spike, there might be some really interesting short covering going on.
It'd be the mother of all upside squeezes. Might be kind of interesting. Yeah, the COT report, by the way, listeners, if you're not familiar, of course, the Commitment of Traders report. We talk about that a lot here, when we're talking, obviously, the commodity products like our TWIFO show later in the week and LSFO and things like that. We don't really bring that up here on the old Vol Views. Maybe we should start discussing that a little bit more and maybe some of the implications here. But interesting stuff. And yeah, a lot of people are just judging by by the feedback we're getting. A lot of people noticing that and perhaps scratching their heads. Perhaps that in and of itself a bit of an interesting indicator. So there you go, listeners. Everyone out there saying we don't give enough time for the listeners' mail. There you go. Putting one up there at the top of the show. We already hit on VVIX. Let's keep on rolling then into, I know, Russell's favorite segment. I know it gives Mark a chuckle as well. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
So if you're new to the show, maybe you just don't know what the heck is that crazy segment. This is the portion of the show where Russell just goes on at length, 25 to 30 minutes at least, on the in-depth intricacies of all the paper he's seeing going up in the VIX weekly options. All right, have at it, sir. I'll be back in half an hour.
Weeklies are quiet. There, I'm done.
Oh, okay, that was a little bit less than half an hour. Now I have to fill.
Wait, next week is standard expiration week, and it's all with VIX pretty low, and they're not being a lot on the near term horizon as far as a market specific event. The VIX weeklies are really, really quiet. The closest thing to an interesting trade I can find from today, it looks like somebody sold the August 31st 15 puts and also sold the August 31st 17 puts. They took in, so this is, low volatility going into Labor Day. Which, that always works except last year. They took in $1.55 for the 15 puts. They took in $3.20 for the 17 puts. So their break even levels on those things are $13.45 and $13.80. They need us to boost up just a little bit from where we are right now to start benefiting from those guys. So somebody that maybe is looking for, it looks like they sold the 15 puts and then they goofed around for a few seconds and came in and sold the 17 puts. Like they have got a bias against the number 16. So that, as far as the weeklies go, they really are kind of quiet. And with standard expiration next week and us coming into what has traditionally been a very quiet period in the year, there's just not a lot to talk about. So what will we talk about for the next 27 minutes of my segment?
Russell, the one thing I would say is that things are quiet, but relative to how quiet they were months ago, this is great volume. Yeah. Now, the other thing is the futures on the 24th and the 31st. The 31st, right in the face of Labor Day weekend, that future is 14.25. The 24th is 13.7. Is there a Fed meeting I'm not thinking about? I have no idea what is going on there.
Nope.
It is those are super juicy. One trade we fooled around with at Option Pit, and I think you'll like this, Russell. Mm-hmm. We did the August 13 2x5 straddle. So we bought 2 of the 13 calls, AUG 24 13 calls, versus 5 of the puts. And we paid, I think, $480 or $475 for that that 2x5. And the idea is that if the VIX is going to blow up, it's really going to blow up. And if the VIX isn't going to blow up, then there's a decent chance that those puts, those AUG 13 puts, will end up being worth more than we paid for those calls. And you end up with a pretty nice pocket profit.
The VIX futures at a premium. I'm just thinking that one through while you were talking. If you're one of those 3 guys in the middle of the VIX pit and somebody comes in and they want to buy puts, you've got to sell puts, right?
That's kind of how it works.
Yes, you do.
And then what do you do in the future? What do you do in the futures?
You sell it.
Really? What is going on in the world? Why can't we figure out why we're so steep? I can't come up with any answers, and I'm trying.
There's no.
I don't know. My thought is that just people don't trust the market. It's at an all-time high. And maybe people are using the VIX for what it's supposed to be used, which is hedging. And that hedging may be pushing the curve up. Something like that. Other than that, I have no idea.
Yeah, it is a funky time. As we were saying, out there in the futures term structure, we'll be keeping an eye on that throughout the show and maybe continuing to discuss that next week if it is indeed still inflated. As Russell was alluding to, a quiet week in the weekly options front. Actually, not that overall of a quiet week out there in the big mothership VIX options. Actually, some decent paper, including today. Then the product is still hovering around that 600,000 ADV. Has kind of been locked there for the better part of the past few months, about 6:05 right now. And doing already so far, we're at about 12:30, right about it here Central Time, listeners, and already nearly 500,000 contracts having gone up. So it seems like it might be a fairly active day, one of the first days of the week where we really break through that ADV with any sort of significance to the upside. A lot of interesting stuff, lightening it up. Even today, what we were talking about earlier here on the program, if I can indeed all of a sudden, my screens are not cooperating. There we go. As we are looking at interesting trades, Mark was alluding to some 1x2s. There are also some straight up, looks like verticals here. It got the 2017 vertical in September going up 30,000 times up there this morning. So that alone accounting for 60,000 of that's 480,000 some odd contracts we were talking about earlier. Also seeing verticals going up in AUG as well. AUG 17 22. These not on a ratio. These are just straight up 1-to-1, 13,600 there as well. We also saw someone coming in against these AUG 16s. Just straight up selling about nearly 14,000 of those for $1.50, pretty much hitting bids. Thursday, also a fairly active day, hitting right around the 600,000 mark with, again, Sep upside coming up. We saw the Sep 24s. It seemed a reasonable strike not that long ago. Now it seems to be wildly optimistic. Someone perhaps feeling that way as well, blasting out about 22,000 of those. We also saw a lot of trading out there in Nove. Again, that 30 strike is, we've talked about it before, and that 30 strike, I don't care what month it is, still seems to just capture the imagination of so many people out there. This time the Nove 30s lighting it up 18,000 times. Thursday for 72 cents, kind of just splitting the uprights. Looks like paper probably selling those, but I'll have to dig in there a little bit to be sure. And again, Sep 24s were the trade of the day on Thursday. Another about 17,000 of those going up later on as well. Also saw Dees active a little bit there. Dees 22s, someone coming in out of nowhere and just gobbling up about 8,000 of those bad boys, saying, you know what? I think by Dees, the 22 strike may be a little bit more reasonable than what we're seeing. And of course, looking at those futures, that's actually not that wild of a level. Wednesday also doing about 630 thousand. So again, a fairly active week, slightly north of ADV on a lot of the days out there. We were talking last week about the big just put palooza. That was lighting it up. This week, we did see some puts go up, though not quite as many as last week. This time, we also saw a funky, looks like a bit of a three-way going up out here with the Sep 13 puts versus the Sep 26 call spread. That going up just a tick under 25,000 times. Paper buying the 26s, and I believe selling the 20s and the 13 puts perhaps against that. So interesting three-way going up there. Again, that totaling for about 75,000 contracts. Tuesday, also an active day, about 765,000 contracts. So well north of ADV, the lion's share of that, nearly 100,000 coming in this one massive sweep of the Sep 22s. Paper gobbling up 84,000 of those for 57 cents, and that wasn't the only thing lighting it up for size that day. Again, the Sep 13 puts, paper blasting out about 62,000 of those for 45 cents. Also active in the 13 puts in AUG, doing about 38,000 of those for $1.05 out there as well. We were talking earlier about put 1x2s and some put love still alive. Nearly 100,000 contracts going up in that one spread as well. Also saw some funky upside verticals here. It's like about 12,000 of the Sep 2026 spread going up about 13,000 times. Actually, that was against, excuse me. That was a whole funky four-way going up on there. We'll move on to Monday, lest we spend the whole day on Tuesday's paper. Monday also active, about 660,000, and the trade du jour was a bit of a weird. You can call this a bit of a ratio, I suppose. It was pretty much total. Actually, there was total aggregate of about nearly 50,000 of these Sep 14 puts, lining it up. Paper selling these again, doing two chunks, about 42,000, then about 7,000 or close to it. So very near to 15,000 out there as well. So puts still active this week. We didn't see perhaps all the size that we did last week, again, because we've already seen a lot of that fall off out there in the VIX, but still a lot of interesting paper out there lighting it up. Let's turn to what were the hot strikes, the strikes du jour this week. And surprisingly, most of the puts fallen off the charts. Only one put to be found on our top 10 for the hot VIX strikes for the week. Number one is the Sep 21s. Only 228,000 open of those. If you remember some of our earlier programs earlier this year, just even a month or so ago, we were talking about much higher numbers, 400,000 plus for that July 30 strike. That was a very active strike. And here we are, roughly half of that now with the Sep 21s. Even though there is a decent amount of paper open interest out there, it's spread out a lot more this month. Number two, the AUG 18s, about 220,000 contracts open, dropping number three. The AUG 21s, 197, so we're already under 200,000. Got to go down to number four to find our first puts of the day. These are the Sep 13 puts 187,000 and some change open there. Number 5, again, 30 strike, the AUG 30s. People can't get away from those. 171,000 open there. Number 6, the Sep 22s, and also number 7, the AUG 22s, pretty much tied, 168,000 a piece, for number 6 and number 7. Number 8 is the AUG 20s, Sep 20s with a 162,000. Number 9, the AUG 20s, I had that backwards, with 147,000. Then winding it down again, the ever optimistic Sep 30s with 143,000. Maybe there's a separate study to be done there on the mental and psychological appeal of the 30 strike pretty much across the board. People refuse to relinquish it in any capacity. A total of about 7.36 million contracts open, about 5.1 of the calls, and about 2.25 or so over there on the puts. Any other paper lighting up for you guys' perspective? Mark, you were talking 1x2s. Anything else catching your eye out there in VIX options before we turn our attention to earnings volatility?
No, that was about it.
Yeah, it wasn't. It was a fairly active month, week, I should say, all things considered. Even though perhaps not as crazily, remarkably one-sided as we saw earlier this week. We have, this is what the commenter was trying to write. This is Mama2 coming in via our Mixlr chat. Again, listeners, if you do stream live, you can join us, MIXLR. We tweet out the link. We put it out via our Facebook page and the website and everywhere else. Or you can just follow us on Mixlr, and you'll get notified the instant we go live. So if you do, you get to join a little bit earlier. We'll put you in before the volatility voicemail. He's asking, or should I say commenting, CNN doesn't advertise this too much, but there is significant tension with Russia and the Ukraine around the Ukrainian terrorist group arrested in the Crimea, both sides beefing up military around the border. That might explain the futures creep. So there you go. We have another thing to throw into the hat of potential reasons for the VIX futures term structure. What do you say, Mr. Rhodes? Do you think it's Ukrainian-Russian tensions flaring up the futures again?
Well, I can tell you if they're going to fight, they're going to do it sooner rather than later because nobody wants to fight the winter.
Yeah, we learned that.
That is true.
We learned that from Napoleon and or Hitler, or perhaps both.
Just about everybody. You don't invade Russia in the winter.
No, everybody takes the winter off when there's going to be fighting. But yeah, I just saw where Russia's moving a bunch of stuff to the Crimea. So it's sparking up there. Trouble is brewing in the South China Sea as well.
Oh yeah.
I would not be the least bit surprised to wake up one morning and a small shooting war is underway. And in fact, I was reading up on the thing with China, and apparently one of their military guys said, "We are prepared for a swift, decisive, and violent conflict in the South China Sea."
Well, there you go. That's always good for a nice little boost to the VIX futures term structure right there. I did notice, speaking of VIX futures, hot breaking news. You guys over there, the SIBO, just posting as we're talking right now. VIX futures hitting a new all-time open interest record of 543,192 contracts. That was a few days ago, back on the 9th, right around the time VIX cash flirting with those, that actually nearly a 2-year low out there. So interesting stuff out there. VIX futures lighting it up and certainly shaping up a bit oddly. So perhaps, who knows, maybe Ukraine, maybe South China Sea, maybe a little bit of all of the above swirling together to make that cocktail of a very, very steep slope out there in the VIX futures. Let's turn our attention to another area that's always contentious and hot. That is earnings/equity volatility. And we were talking earlier this week on good old option block, and merits discussing here as well. The ongoing, shall we say, drama/tragedy/ I don't know what to term it. That is VRX, of course, good old Valiant. And they had earnings earlier this week on Tuesday before the bell. They were pricing in about a $3 straddle, which worked out to about a little over 13% at the time. And they came in and effectively, also, as people were reporting, we talked about as well, a lot of people were lining up on the puts of all the active options. 8 out of 10 of them were pretty much puts, including the 15 puts, the regular AUG 15 puts, which were substantially out of the money. They're about $7-8 out of the money at the time. So this thing really needed to fall out of bed if those puts were going to come into contention. And then lo and behold, those puts not really relevant. The stock opened actually about $1.50 higher, so about half of that straddle. But as the day went on, the name rallied about $6 total. So it was rally ho mode, trading up around the 28 region. And then yesterday gave up a lot of that again, as there's news that the stock is under criminal investigation by federal prosecutors, and so we're back around that 24 range again as we're talking right now, right around 24.80. Actually getting a little bit of a boost today, even though the rest of the screen is pretty much red out there on the thing. So interesting stuff out there in Valiant land. We'll see if that continues. That's always been a good source of volatility, no matter how you measure it. That said, Mr. Rhodes, I know you like to watch a good individual single name for vol. You like watching Valiant or anything else catching your eye this week as we're kind of coming to the end of all things earnings for this cycle?
Next week is one of my favorite periods with respect to earnings week, because it's all about retail. And we got Home Depot, Lowe's, Target, Walmart, all these guys with weeklies that are reporting next week. And you've heard some slightly, negative news coming out of Gap, and it'll be interesting to see if it bleeds over to some of the other retailers. Get an indication of how back to school is going and all of that. So I'm looking forward to earnings volatility next week. It's retail week.
I'm also looking forward to whatever Mark's cooking over there. Let's see if we can get him to turn off his microwave for 2 seconds during the show here, as we keep on rolling here into some other the big topics we were talking about, VIX futures before, and talking about other things coming out of the realm of SIBO. We've been talking a lot, Mr. Rhodes, here about all things weeklies, the continued love affair in the marketplace with all things weekly. We have Friday weeklies. You guys introduced Wednesday weeklies a few months back, and now here we are. If all things go as planned, you guys are about to announce the Monday weeklies starting this coming Monday, August 15th. So if you're one of the people out there, listeners, I know there are a bunch of you floating around who've been saying, there's not enough weeklies to my taste. I would like a de facto daily option, which we're getting close to that. All we're missing at this point, Tuesday and Thursday. Coming up on Monday. Are you guys over there in SIBO land pretty excited, Mr. Rhodes, for the addition of yet another contender to the weekly crown, the weekly throne there?
Yeah, I actually am. I was out here speaking. I'm out in San Francisco, and I was speaking to the Silicon Valley Option Group last night and talking just this. And what I think is going to be a little bit different, you can take a look at the Wednesday options, and you can do a 1 or 2 day trade on Monday or Tuesday. You can take a look at the Friday options, and same thing, do a 1 or 2 day trade on Wednesday, Thursday, or Friday, or something like that. But the Monday expiring one trading day after the weekend, I really am going to pay some pretty close attention to the order flow for a little while and see if anybody's got innovative ways of taking an over the weekend position in options. I just, we all know that the time decay is a little bit different on Friday afternoon and over the weekend for options that expire the following Friday or whenever. I'm truly interested to see how these things behave on Fridays going into a weekend where, we just talked about two major conflicts that could possibly spark up, and see if there are any different uses relative to how the Wednesday and the Friday weeklies are being used. And another point you got to keep in mind, we have month-end SPX options. So if the last day of the month is a Tuesday or a Thursday, 4 of 5 days that week will have SPX expirations.
Woo! And then if it's a quarter, if the quarterly lands there, you could potentially have
four.
Yeah.
4.
Yeah. Well, yeah.
You can have quarterly and monthly that are different.
Oh, that's true. That's true. I'm sorry, but that would have been awesome. Anyway, I think Monday will be interesting. I think you're going to see a lot of people that, maybe just want to hedge their weekend risk. I think that will draw all kinds of weekend premium traders looking to, lots of people willing to bet that nothing happens, and lots of people betting that stuff is going to happen. I think that it could be a really fascinating trade, and I'm looking forward to it. I'll be honest. I think it's going to be. I think those are going to have some volume to it eventually.
Speaking of volume, looking like the Journal came out with an article as we're talking here, pretty much reinforcing what we were talking about here. The volume going up in VIX out there today about 1.5 times what they're seeing, at least in the calls, about 1.5 times what they're typically seeing. And so calls, again, outnumbering puts today about 4.5 to 1 or close to it out there, and talking about all the love out there for the 20s out there in Sep and a few others. Again, all things that we've touched on earlier in the program, but Journal also likes to parse all the flow out there in all things VIX options. We got a little bit more time here on the show, so I think what I'm going to do is I'm going to jump ahead to the Vol voicemail, because we have a couple, shall we say, intricate questions. We'll see how many we can get to here on the program.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Like the man said, this is the portion of the show where you guys get to take the reins with some interesting and some esoteric, all over the place types of questions and some comments and everything else. Going to start things off actually with one we've had sitting in the queue for a while. Came in a few weeks ago. We hadn't had a chance to get to it on earlier shows. This one came from Service Dog. Good handle. I like that. He or she writes, do stock market circuit breakers have a significant impact on market volatility? Now, this is an interesting topic. We've seen this play out quite a bit over the past year or so. It became very, very front and center back during the furor with China earlier this year, where they were playing around with a lot of their circuit breakers. Some critics arguing they had them too tight, and that was causing a lot of the excess volatility and craziness you see, because whenever you approach a circuit breaker level, orders pile in because they're afraid things are going to be shut down. That tends to exacerbate swings and things like that, and makes you hit the circuit breaker even faster. And so there's a big argument to be made between keeping the circuit breakers wide versus keeping them tight. A lot of that playing out there. And of course, post August 24th of last year, there were a lot of concerns about the way the circuit breakers were enacted here in the U.S. as well. And this has been an ongoing debate for the better part of the past year, so much so that we're seeing a lot of developments on that. Just in the past few weeks, we saw NYSE and BATS coming out a couple of weeks ago talking about new implementations of their own circuit breakers, which they're trying to really, I think, automate that process and have a lot more of a rules-based approach to when you can enact a circuit breaker, when you can enact a halt. Not the circuit breaker for the broad market, also halts in individual names as well. Before, it was kind of a bit of a disorderly process, particularly when you're talking about NYSE, where they have specialists still involved in some of that process, and that's they had all other set of rules. They're also looking to effectively somewhat harmonize their rules and to come in line with making this process more automated, a little bit more straightforward. In fact, they just got approval from the SEC over there at NYSE about a few weeks ago to allow for, on those extremely volatile days, to have a lot more clear rule sets, which names can reopen, when they can reopen, which ones remain halted, and just kind of keeping things in line. That was particularly of concern with a lot of the ETFs that were out there, which were printing all sorts of crazy numbers after August 24th, or sometimes couldn't even reopen for a while because they just couldn't disseminate a value. And we all know a lot of paper goes up in ETFs these days. So if those things can't open or can't trade, a lot of the marketplace is effectively put out of the marketplace. So that was also an interest. The NYSE ruling had to rule around Rule 48, which is a very esoteric rule that puts down a lot of guidelines about when underlying can be reopened after a trading halt, whether it should be reopened, et cetera. This is going to allow a lot more clarification for that. So there has been a lot of fluidity in this space just in the past couple of weeks. Another reason why we hadn't had a chance to bring it up. But of course, getting back to that initial core question, it's a really interesting topic. A lot of, I think, contentious debate on both sides. Let's start with the meatball if he's done cooking whatever he was cooking over there. By the way, what were you cooking?
What was I cooking? A little bit of chicken parmesan, and it's delicious.
That's a perfect thing to be eating in the middle of the show. That said, sir, what do you have to say for our friend here, Service Dog, and circuit breakers?
I'm sorry, my mind just went blank, Mark.
You're eating too much chicken parmesan.
I am. I'm sorry.
We just hit the meatball circuit breaker.
I think we did.
We did.
I think we did.
He short circuited. I couldn't help it.
All right. Yeah. All right. So I'm sorry. I think that when they're properly instituted, they do a good job. The one thing that you'll notice is these circuit breakers will hit in, and then markets tend to kind of bounce off them. And one thing that they're really designed to do is to kind of fight program trading that can cause these crazy technical sell-offs, just as people are – Japan sells off, so you sell China, and it's all done electronically. By dropping a circuit breaker in it, it stops some of that cascading, snowballing effect of major sell-offs. And so in that respect, the potential for it to stop vol from completely blowing up is there. But on the other hand, they really do have to be implemented properly. Otherwise, you do run into the issues with China, which is why, the government telling when circuit breakers should be instituted, it doesn't work quite as well as, a free exchange where, the NYSE and BATS are doing a slightly, I think do a pretty good job with the process.
Mr. Rose, same thoughts for you. And what do you guys over there at SIBO? What do you guys think about all these changes? And what are you guys cooking up maybe to make these processes go more smoothly in the future?
Well, they don't include me in those conversations.
But
so
you're in the corner office. You decide all these things.
I am. I'm actually in the corner. They give me a really nice space out here at LiveVol. I'm going to tweet it as soon as in just a second because I like to tweet. But I think the circuit breakers are what we've got's pretty good. It's one of those things that nobody even pays attention to until we need them. I like that we take some of these trading pauses and they really allow people to calm down just a little bit. The thing that caused last year's August mishap really was, the futures market versus our option market. The futures market from CME Group was hitting the limit, and that basically resulted in our guys having a difficult time pricing out the options for a little while, which then, bled through to everything else. So, maybe we coordinate doing something in the options whenever the CME futures do something, since that's what the guys are pricing things off of. That might be something that I'll take back with me and suggest to the powers that be that don't let me come to the meetings at CBOE.
You should tell them to include you, sir, as you are indeed the holder of the corner office. So you should be consulted on all decisions, big and small, over there in the realm of SIBO. All right, I think we got time for about one more here. Let's go with a quick one, or maybe this actually could be a lengthy one, depending on how we take it. We had a lot of people writing in as after our big conversation recently on the show about all things VXX and our debate about whether it would be in the fractional sense. A lot of us surprised. I think Russell, not the least amongst them, by the fact that it still was in the whole sense. Was it? I forgot, 6 or 16 cents, somewhere in that range. But yeah, it wasn't in the decimals yet. I think a lot of us thought it would be pretty much eroding to zero at that point. But all of that boils back to some of the questions we got. Here's a quick one from MoneyPenney. I like that handle. A little Bond fan there. Simple question. How does VXX work? There's a lot of different ways you could take this, I think. Based on our conversation from a few weeks ago, we could say it works pretty poorly because it just erodes to zero, unless that's what you're speccing on, unless you're putting elite puts in your IRA, and then you're a very happy camper. If you're kind of a buy and hold type volatility trader and you're using VXX in that capacity, then you're not going to be happy at all with the way the product works. If you're trying to do intraday type trades on volatility, yeah, it's a little bit more suitable for that. So that's one way to term it. I think there's probably another way where she wants to know the actual fundamentals. VXX, of course, is, if somehow you're not familiar with this product, it is the VIX short-term futures ETN. So it is indeed trying to replicate those near-term futures. Who wants to tackle the actual process out there of how VXX attempts to go about this with rebalancing and whatnot? Sebastian, you up for this?
Yeah, but I want to make a comment. And VXX does what it's supposed to do. And if you took a similar time frame and set up an insurance hedge at like the 30 delta put where you rolled every month, the payout is actually very similar in terms of how much you lose. So it's not that, we know historically hedging, while it reduces portfolio volatility to the nth degree, is costly. And that's all VXX is doing. It's not a bad product. It doesn't. It's not like it's not something. There's nothing wrong with it. It does what it's supposed to do, and a lot of people don't understand it. Now, what does it do? It attempts to be a long VIX future with a constant duration of 38 days. All right, so it tries to constantly be long a duration of 30 days to expiration VIX future. So the problem here is that it's kind of like, when I describe VXX, I call it the Sisyphus effect. You know who Sisyphus was, Mark?
Kept pushing
you're an Ivy League boy.
Kept pushing the rock.
That one.
Could not get the rock up the hill. My favorite actually was Tantalus, but that's for another show.
Oh, okay. Well, so yeah, it's similar to that. What you're essentially doing is riding VIX futures down the curve. And so right now, August is 1250 and the September is 15. So the VXX 30-day portfolio is going to be some constitution of long August and then long September. And what it's doing is selling its August position to buy its September position. So you're selling something at 1260 to pay 15. So here's the problem, that when you pay 15 for that Sep future, eventually September is going to be right at 1260, just like August is. So you're basically running a lemonade stand where you're paying $15 and for the lemonade and selling the lemonade at $13.50 and doing that on a daily basis, or $12.50 or whatever. And that's really what creates the down drag in VXX. Now, when the curve is backward, VXX actually does have the wind to its back, and it actually is selling a future at, say, 18, 19, or 20, and buying a future for 15, and that actually adds, creates more value and creates a positive daily, I don't like the term roll yield, but we can use it, a positive daily roll yield in VXX. That is how that product works. It's essentially running a lemonade stand where the lemonade you buy is more than you can sell it at.
Yeah, the old, I'm not a big fan of that term, roll yield, because it implies some sort of yield, and typically it's negative for this product. I've seen different studies, that range anywhere from, some say about 4% a month. I've seen upwards, obviously it depends on this term structure, upwards of 15% a month that this product could actually erode just based on that negative roll yield. I like to call it roll risk for BXX because it is an inherent risk at the end of the day. But you're right, it's not fundamentally broken. It just performs in a way. What is it? I think it's your counterpart over there at Option Pit who likes to call this product predictably crappy. I think that's a good way to go about it, because if you understand the crappiness, you can trade around it, and then it works the way it's supposed to, which is inherently perhaps crappy, or perhaps the way you want it to perform. Good questions, everybody. Now it's time for us to embarrass ourselves roundly, because it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the Crystal Ball. Again, the portion of the show where we embarrass ourselves horribly for your own amusement and entertainment. That's how much we love you guys here on the program. week in, week out, making crazy predictions. That said, I did pretty well a couple weeks ago, and I was looking good at the start of the show. It seemed like I had it as a lock. We were hovering. I picked about a 11.15 out there in the VIX cash. We were hovering in the low 1130 range right as we started the show. So it seemed like I was a lock. But as we are proceeding to the end of the show, and that's when we actually count it, I have to move it against myself. VIX cash rallying up a bit. Actually, we're talking right now, right about 1175 or so. So we're a little bit farther away from my level. Mark predicted about 10 and a quarter, which is we came close to flirting with a 10 handle. Got to 1102 earlier this week, but never actually broke into that 10 range. So never got close to that 10 and a quarter. And for some reason, I don't know why I don't have it, but I don't have yours here, Russell.
He over. He took 12 over 12.
Yeah, you took something.
Yeah, I took
over.
I took like 12 or 12.50. I was the high.
Something along those lines. So since we don't have Russell's, I guess if you take closest without going over, if we do Price is Right rule, I guess that would mean if we have actual equidistance. I don't know what Russell's exact number was, but it's somewhere between him and me. So we'll go for it. And I'm not sure if it's a prize or a horrible thing to have to go first. I went first last week. I'll give Russell the prize of going first this week, and I will actually write down what you say this week. I promise.
You're going to take. You've just given up on me ever winning. I think that's why you did that.
Well, your ghost is pretty awesome, so I'm going to stick with your ghost. I don't know about you, but your ghost knocks it out of the park.
Well, what does the ghost say to me? I'm going to say 13. I'm going to say 13.
Really? So you're not feeling all the you're not feeling all this sell-off love, all the put love we saw last week. This week, of course, not as much put love, but still some. Out there, you're not feeling flirtations back with a 10 handle. You're feeling a pure 13 even. Wow. Okay, I'll put you down for a 13 even. And as he's cooking or doing something over there, I'll go next. I like my range. I think we were flirting ever so close with that 11.15. I'll go a little bit higher this week, but not much. I'm going to say 11 and a quarter. So we'll be right back around again where we started the show today, maybe a little bit lower at the end of the show next week. That brings us to the meatball. You and your counterpart, Mr. Rock Lobster, have been leaning on that 10 handle for a few shows in a row now, Mark. What do you think? Are you still feeling that 10 handle love, or are you thinking a little bit north?
I'll take the under. I'll take anywhere below 11 and a quarter.
So you don't get all below 11 and a quarter.
I get all below 11 and a quarter. 11.24.
I will put you. Oh, if you want to do that, I can put you down for that.
11.
11. All right, fine. That's a little bit more reasonable as we bring to a close. Listeners, you too can play along and or mock us via the Mixler or however else you like to play along here with the program. But unfortunately, that music means we've come to the close. Yet another fun episode of Volatility Views, and what a journey it was through the VIX futures, into VXX, into circuit breakers, into some equity volatility, and a lot more of your questions, and then back into the crystal ball yet again. Fun show, as always. If you missed the live stream, of course, you can always find us iTunes, TuneIn, Stitcher, all those places, Monday morning, bright and early. That's where you get the nice, produced, jazzy version. We cut out all Sebastian's bits, and it sounds really good, so don't worry about that. But before we go, let's check back in. Let's start with the much maligned, aforementioned Greasy Meatball. What's cooking in your neck of the woods, sir?
I'm doing a webinar on Tuesday on weekly options, and maybe I'll have to add something in for dailies. Go to optionbit.com/blog, and you can see my trade idea of the week on UVXY, and you can register for the webinar.
Yeah, you mentioned that on Option Block yesterday. Well-timed one, because someone actually wrote into that show asking for resources on weekly options. It's almost as if you paid one of your mentees to write in. It was so well-timed. But yes, checked out that webinar. If you are indeed interested in weeklies or the forthcoming dailies, if our friends at the CBOE have anything to say about it. Speaking of our friends at the CBOE and all things CBOE live vol, Russell, you gave us a little bit of a hint, a taste. Any other secrets they've given to you during the course of the show, maybe whispered in your ear as the show was going on, saying, hey, mention this feature coming out in the realm of live vol sometime soon?
No, I think they all went to lunch. No, they haven't come in here while I've been in here. So nothing new out of the live vol, guys, that I'm aware of. Next week, we've got something exciting going on, guys. Maybe Mark Sebastian's there. I know Mark Longo is there at our VIX Focus class next Friday. That's next week.
Yeah, I was supposed to be there. Might be a little doubtful with Lauren having the baby on Wednesday, potentially Wednesday.
Oh, come on.
I know.
We'll see you on Friday. We'll see you on Friday.
Just ship Andrew in from Maine. That'll work. Yes, listeners, if you are so inclined, and I don't know, you have to email us if you are going to be in the Chicago area. You'd like to see that show because it is part of an Options Institute class. People have to pay for that, of course. Maybe we could sneak you in at the end so you can come see the Vol Views show live over there at the SIBO for the second time live show over there in about a month or so. So a lot of SIBO business over there. Check it out. It'll be Friday at the usual time, noon Central. If you are going to be around in Chicago, let us know. Hit us up. I don't think we have room for a ton of people, but maybe we can squeeze a handful of you in to check out the show live. It'll be me and Russell, maybe special guest to be determined, as Mark is bringing new life into this world and maybe otherwise occupied. And on behalf of the Greasy Meatball and Mr. Corner Office, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and of course for sending in such great questions. Keep them coming in. Also, don't forget to tune in every Friday, noon Central, 1 p.m. Eastern via Mixler. Love to see you guys in there as well. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.